All right, let's talk about Thailand. But we're not talking about the usual travel brochures today. We are going deep, taking a hard look at the investment landscape for 2026. What we're seeing is this incredible convergence of policy, economics, and infrastructure, and it's creating what might just be one of the most compelling investment opportunities in all of Asia right now. And this quote right here, it just hits the nail on the head. The whole theme of this is timing. The ground is shifting in Thailand's investment world as we speak. This isn't some fuzzy, far-off forecast. This is about understanding what's happening on the ground right now so you can get in front of what's coming. So here's our game plan. We'll kick off with the main thesis, the big picture argument. Then we're going to unpack the two major catalysts that are driving everything. From there, we'll map out the specific opportunities, give you a practical playbook for how to act, and finally show you the support system that's already in place to help you. Okay, let's jump right in. What is the core argument? Why Thailand and why now? Here's the bottom line right up front. What's happening is a deliberate, policy-driven transformation. This is not some random market boom. It's a calculated move to pull in foreign capital by making the country more competitive and, frankly, a whole lot more accessible. And understanding that this is intentional is absolutely crucial. So what's actually powering this whole thing? Well, it's not happening in a vacuum. It's being driven by two really powerful forces happening at the same time that are fundamentally rewriting the investment rulebook. And this is where it gets really interesting. Think of it as a push and a pull. On one side, you've got an internal push, a new vacant land tax that makes it really painful for landowners to just sit on empty property. On the other side, you've got this massive external pull, game-changing new laws that are tearing down the old barriers for foreign investment. It's this one-two punch that makes this moment so unique. Now, to really feel the power of that internal push, just look at this number, 3%. That's the maximum tax per year on the value of vacant land. So if you're holding a piece of property worth, say, 100 million baht, you're now looking at a 3 million baht tax bill every single year just to do nothing with it. Suddenly, doing nothing is a very expensive decision. You have to build, sell, or find a partner. And then you have that external pull. I mean, the change is just night and day. Before, you almost always needed a Thai partner to own 51% of your company, and you were looking at a 60-day approval process with all sorts of hoops to jump through. Now, in key sectors, we're talking 100% foreign ownership, approval times cut in half, and a much simpler structure. The door isn't just being opened, it's being blown wide open. Okay, so we've got these two massive catalysts pushing and pulling the market. The next logical question is, where are the opportunities? Let's move from the why and start talking about the where. Well, the most direct result of that land tax is, you guessed it, real estate. All this unused land suddenly has to be put to work. This is creating some incredible openings, from high-yield rentals in tourist hotspots like Phuket to massive development projects along the new economic corridors. And for the plots that aren't exactly prime real estate, people are getting creative. Wellness resorts, data centers, solar farms, these are now really viable, tax-smart businesses. And believe me, when we say high yield, the numbers really do speak for themselves. Take a hot market like Phuket. With tourism roaring back, short-term rentals are pulling in gross yields of 8 to 15% a year. Even long-term rentals are getting a very healthy 6 to 8%. Seriously, try finding returns like that anywhere else in the region right now. It's tough. Those new foreign ownership laws, they're basically a direct challenge to regional hubs like Singapore. By allowing 100% foreign control in huge industries, tech, telecom, financial services, Thailand is essentially rolling out the red carpet. They're making a pitch to attract top talent and investment, but with a significantly lower cost of doing business. It's a pretty powerful combination. And finally, think about all the projects needed to support this growth. The big American and Chinese tech giants need data centers. The new high-speed rail link to China and Laos needs smart logistics hubs. And Thailand's massive agricultural sector is crying out for modern cold chain storage to export its goods. These aren't just abstract ideas. They are tangible, large-scale infrastructure plays that need to happen. So the opportunities are clear, but how do you actually do it? How do you execute an investment safely and securely? This next part is your practical playbook. We're going to focus on the must-know legal and financial steps to protect your capital. You've really got three main ways to own property. For maximum security, the gold standard is a foreign freehold condo. It means your name is directly on the title deed. Simple.
For a house or a villa, the standard route is a 30-year leasehold. You own the building and you lease the land. And finally, you can use a Thai limited company. But you have to be careful with this one. It's really designed for active businesses, not just for holding property, and the authorities are cracking down on people misusing it.
Okay, pay very close attention here because this is non-negotiable. It's called the Foreign Exchange Transaction Form, or FET form. This is the official document that proves your money came from outside of Thailand. The process is strict but simple. 1. Send your funds in a foreign currency, like dollars or euros. 2. Let the Thai bank do the currency conversion. 3. Clearly state the purpose of the purchase. And 4. Get that official FET form from the bank. Without it, you cannot legally register the property and you won't be able to take your money out when you sell.
You have to understand, Thailand is a buyer beware market. Your only real insurance is thorough due diligence, and it has to be done by an independent lawyer who works for you, not for the seller. That means doing a title search, making sure the property isn't landlocked, and confirming all the building permits are legitimate. Skipping this step is, without a doubt, the single most expensive mistake an investor can make.
Now, I know all this legal and financial stuff can sound a little daunting, but here's the good news. You do not have to figure this out on your own. There's a really robust professional ecosystem on the ground ready to support you. There's a whole support network waiting. You've got legal experts who live and breathe due diligence. You have project managers who can take a development from concept to completion, often using what's called an EPC plus F model. That stands for engineering, procurement, construction, and the key part, financing. There are also specialists for business matching, property management, and investment consultants to guide you through the whole process. So, to wrap it all up, for 2026, you've got all the major forces pointing in the same direction. Government policy is welcoming. Huge infrastructure projects are creating new value. Market demand is rising. The whole framework for success is being put in place. The only question left is the one we started with. How will you position yourself to take advantage of it?